Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Friday, August 21st. Okay, Bloomberg reports that the U.S. is playing with fire as dollar risks yen-style debasement. The U.S. bond buyback pledges prompting comparisons with policies in Japan where efforts to contain borrowing costs resulted in prolonged currency weakness. The U.S. government's move is the clearest sign yet that the nation is following Japan towards debasing its currency, said Robin Brooks, a senior fellow at the Brookings Institution. Okay, let's stop here for a second. And this is Bloomberg's bias, and you know where I generally stand, but Bloomberg is very, very anti-Trump, and you know we are not. This is not yen-style debasement. Yen-style debasement is is basically QE on steroids, where the central bank was just buying debt and putting the money in circulation. This is borrowing money short term and retiring money long term. It's basically dollar for dollar, so it's nothing like that. And also, to quote somebody from the Brookings Institution, so for people who pay attention to politics, Brookings is what's considered the premier left of center think tank, sort of a little bit like the opposite of the Heritage Foundation. You know, when you quote someone from Brookings and you're picking out the quote that is really the most inflammatory. So, you know, why are you quoting Brookings? Now, I have to say that Robin Brooks used to be a currency strategist at Goldman, has a very good resume, but the fact that he's at Brookings and he's getting quoted on this is Bloomberg is basically cultivating a quote. They want a quote. They want people to click. So, you know, now other people say that Standard Bank's head of G10 strategy says bond containing yields with buybacks will only pile pressure on the greenback while failing to tackle the underlying budget deficit that's pushing them higher. This is really not tackling the budget deficit. This is saying, you know what, you want to keep selling the short end short. We're going to make it though. That's not a layup trade. You better you better understand what your risks are. And even they admit later in the article that the Treasury buybacks can't be compared to that kind of monetary stimulus in Japan, and the U.S. hasn't chosen to accept a falling currency as the cost of keeping yields pinned. It can be next to impossible to stabilize a currency once it enters a devaluation spiral, Brooks at the Brookings Institution said. So sometimes you've got to just be careful, and you have to understand where Bloomberg is coming from and who they're quoting. Okay, so let's take a look at what Besant is proposing to do. So here's an example, and this is from James Thorne. He's at Dr. J Strategy on Twitter, on X, and it was Chan Suran who pointed this out to me, and he writes the Point Frederick Substack. So my view is this is sell high, buy low. So an example that this gentleman put up is this Treasury bond. This was originally a 30-year bond that was issued in 2022, in August of 2022. Right now, it's trading at 67 cents on the dollar. When it was issued, it was almost 97 cents on the dollar. It's dropped 29 cents since then, in part because interest rates then were substantially lower than they were today, probably on the order of 300 basis points. So you issue something at 97 cents on the dollar, you buy it back at 67 cents on the dollar. That's a 31% discount after 4 years. So because interest rates are higher, so you're basically retiring, you're retiring this certificate. You're buying it back 30% lower than where you sold it. Now, this is not a bad strategy. You cannot do it forever, but it suits right now. You're doing well by buying something that's much cheaper. Now, note that the yield on this is probably 3.5%. I didn't look at this specific bond. Now, you're getting rid of a bond that you only have to pay 3.5% on, but you get all the money immediately up front, not over the course of lower interest payments over the course of the next 26 years. And you're probably funding this at something like 4.5%. So in the short term, it costs you a little bit more per year. But if interest rates come down, which I think they're likely to over time, this is fine. So this is what they're meaning to do. It's really not a debasing kind of trade. It's a trade that says, you know what? If you want to push the yields out in the back, we're going to buy more of these and make it painful for you. Okay, this is important for crypto, and crypto is rallying like mad, and that's why I think I want to talk a little bit about crypto. The head of the CFTC, which is the Commodity Futures Trading Commission, which usually does commodities and things that are agriculture and metals and derivatives and different things, whereas the SEC is much more securities, and the SEC cares about reporting to individual investors. CFTC deals with people who are a lot more professional. So the head of the Commodity Futures CFTC says it's really important that we have market structure. We can do that through rules, or we can do that through laws. Now, he says the agency is looking at a number of potential crypto rules, but is waiting to see what happens with the so-called Clarity Act, which is stuck in Congress. Looks like it's supposed to get a vote in September, but it is unclear that will pass. It may just be to make the Democrats vote against it, or not actually let it come to a vote because of the filibuster. So what's important here is you want laws and not rules, because laws at least are made by people who are elected. Rules are made by people in CFTC who aren't elected. Remember this guy, Gary Gensler? He was the first CFTC chair under Obama, a Goldman guy, and he was the worst. He was hated by Wall Street. He put on a lot of very sort of painful regulations to make sure that you had to do things that for transparency that was painful, and I think ultimately maybe not that useful. So when you let an agency run by people who are appointed, who are not elected, you can get a guy like Gary Gensler. So you do want laws, but what they're saying is we don't get a law, we'll do a rule, and rules can be changed later on as well. The other thing that's interesting is they're going to look at finalizing rules for prediction markets like Kalshi and Polymarket. Also, they're going to look at get public input early on the trading of compute futures. I think that's going to be a big deal. That's a 2027 issue most likely. And compute is what it costs to actually pay for AI to do all those cool, clever things for you. I think this is a good quote. If America is going to win the AI race, we have to dominate the compute markets. This is the most important commodity, I think, of our time. I think he's right. Okay, quick update here. Wall Street Journal says Citadel sells over 80% of the situational awareness portfolio that they bought in early August, about two and a half weeks ago. They've gotten rid of 80% of the risk. And he says he wrote in a letter today, it's a remarkable demonstration of Citadel's capabilities. They certainly made money on that. The multi-strategy fund finished July up 5%. Meanwhile, the Miami firm stock-based fund gained about 14% in July thanks to the situation awareness purchase. So I guess that was the very end of July rather than the beginning of August. So they got those things almost 10% lower than market. And as Chan Suran mentions in our interview that's on Global Money Talk, he says, this was an auction, and when they were bidding on it, they didn't know exactly necessarily what was in it. They had a pretty good idea, so they had to price it that way. And, I guess it took a 10% discount to win it. Great trade for Citadel. There was some risk that if those things continue to go down, Citadel would be on the hook. But once the news was out, it actually turned around. So this has worked out very well for Citadel. Brent, on the issue of oil, up 1% into the weekend. Market is bullish here. I think they might be a little too bullish, particularly if Iran is worried about conditions internally, and the U.S. is actually escorting a lot of ships with oil outside of the Strait of Hormuz. Let's see how this plays out. I'm not sure I would sell it in case something comes up, but I think if you're long here, you're long into the weekend. I mean, it's not without risk, and I think it's getting a little rich. Gasoline up 1.5%, diesel up 0.5%. They're grinding higher. We are at highs again since the resumption of hostilities. $4.11 on average for a gallon of gasoline. So the mullahs are hoping this goes up in front of the U.S. elections to get Trump to do something. But at this stage, it doesn't look like that's going to happen. I think they'll look for ways to try to get the gasoline prices down, but it seems unlikely that Trump is going to surrender 3 months ahead of the midterms. Okay. Take a look at crypto. Crypto is up sharply again today. This is from CoinGlass. I broke this into two pieces. It was actually one long chart, one long table, but it would be hard to read. So Bitcoin is showing volume, 24-hour volume. It's up 33%. Open interest up in the last 24 hours, up 5%. That's new money coming in. While liquidation, 835 million on 1.5 trillion market cap isn't a lot, but you can see that it's still happening. So shorts are still being forced out and new money is coming in. Ether, same thing. You have new money coming in, and there's still some forced liquidation. Remember, the Ether market cap's only 292 billion. So you're talking about a little less than 1%, but still substantial. And look at the rip in Ripple. Volume's up 35%. So you're still getting some liquidation. So this move is liquidation. Shorts are still getting forced out and new money coming in. Now, how long will that last? Hard to say. I took a look at the charts today, and this is the daily chart over the course of 2 years for Bitcoin. Short-term, massively overbought here. But does that mean, the momentum is over, RSI is overbought, but does that mean, we're at highs in Bitcoin? Well, no, not necessarily. Look at these. This is 2024. You had a big spike here, but it continued to rally. Remember, RSI is looking at the velocity of the acceleration. So doesn't mean, even though this started to decline, Bitcoin rallied for months after. Similarly here in in 2020, in the middle of 2025. Now here at the highs in October of 2025, when we got here, this presaged a big drop. So does this means will not stay up here for long unless this really erupts. But even if it slows down, that means the acceleration slows down. This can continue to go higher. So, do you want to take some profit? That's a kind of a coin flip. Ether, short term, again, massively overbought. But look at the last few times we are up here. More, a continuing run, more of a run here. And again here, more of a run. So Ether, I don't know if I would sell my Ether here. I think I would hang on and look for a continuation. Solana, maybe it is time to take some profit. If you look at Solana, in this case, that big spike, it continued to run. But here really started a little bit higher and then coming down, and here a little bit higher, and then you had a big retracement. Same here. Now, I don't think this is, if this is a new dawn for crypto, but certainly maybe it's Solana here. If you bought some here in the 70s, maybe up at 90, you want to take some profit and look to reload on a dip. So SK had the buyback the other day. Well, Samsung can't be left out in the cold, and they're announcing an $80 billion buyback or distribution of cash to shareholders. Wouldn't fade this if Samsung is doing it and SK is doing it. Close up on the markets, the bond vigilantes are basically saying to the Treasury Secretary, fight me. Well, you might get what you want. We'll see. We'll see in early September because the 30-year is basically right now more or less right where the announcement started. Bonds have given up some ground today. The dollar is flat. People are worried about debasement. You would imagine that the dollar should rally back, but it hasn't. Metals up strongly, and we didn't have time to go over it, but I like gold here. I don't know how much I love silver, but gold looks really, really good. Equities are bouncing. It's a quiet summer, and crypto, as we mentioned, is still rallying. NASDAQ, no real good news in a quiet market. The S&P 500, we had terrible breath yesterday. We have good breath today. A lot of green, but still a quiet summer Friday. Looks like it'll probably close more or less unchanged, maybe up a little bit. In terms of data, S&P Global Composites were decent, certainly better than expected. Next week, it'll be the end of the summer, or closer to the end of the summer for the U.S., but we do get PCE, which is important, and then Jackson Hole on Friday, we get Chair Warsh's speech. We'll see what he has to say. That'll be the most important thing next week, that and PCE. Well, thank you so much for spending the week with me. Thank you for watching, and I'll see you again next week. Have a great weekend.